About to be all about protecting what you are building, because real wealth isn't just about how much you make, but it's about how much you protect it. In the $1 Million Safety Net, insurance strategies that work while you're living and after you're gone, you'll learn how to use insurance as a powerful wealth building and legacy preserving tool. Our speaker is a certified financial planner and financial therapist who has helped hundreds of high net worth professionals create personalized wealth plans. She serves as a lead financial advisor for the Melanin Money team, helping clients reach their first and next million in net worth. Family, please welcome to the stage, Da-Zha Jones.
To be here. I'm going to talk to y'all. Y'all going to talk back, right? Yes. Okay. All right, so we're going to talk a little bit about how to really use life insurance as a strategy, not just as protection. I know it's primarily protection, but I really want to talk to you about how it fits into the overall grand scheme of things, right? So, all right, when you hear the word life insurance, what do you typically think about? Death, right? But it's in the name. It's called life insurance, right? So I really want to make sure that today we talk about how it's not only your protection, but it really becomes a safety net and really helps you accelerate your way to wealth, okay? All right, so most wealthy individuals really use life insurance. They don't necessarily need it to pay out to their loved ones. They've already created and amassed a ton of wealth, right? So they're using it as a way to help them accelerate and grow things a lot faster. And so, let's see how we get this. Okay, got you. So if you're only thinking about life insurance as a death benefit, you're not only leaving money on the table, but you're also leaving time, right? And that time aspect really comes in as we think about the ways that we are able to leverage life insurance. And so today we're gonna talk about how it becomes a part of your playbook. I'm gonna make sure you have 4 key strategies that you can use to actually be able to leverage it as a part of your playbook. And by the end of today, you're gonna make sure that you understand the right types of life insurance that you have, because they actually work in tandem, right? It's not an either or, it's gonna be how do these work together. We're gonna talk about how to use life insurance to access capital while you're living. Again, it's called life insurance, not death insurance, right? It does insure things from when you're no longer here, but it's also gonna be a key aspect of while you're living. And if we're not using it that way, again, we're leaving both money and time on the table, right? I also want to make sure that we're talking about how it fits into your life buyback number. So all of the sessions that you go through today are going to really connect back to that life buyback feature, because we're trying to make sure that you have more time to spend with your loved ones, time to create memories, time to do whatever you want to do. We're not building businesses to work in them forever, even if it's your passion, even if it's something that you absolutely love doing. I want to make sure that you're not building a cage and that you're able to spend time outside of that, or that you're able to work in it in the way that you want to, right? So we're going to talk about how you can design your policy to create more freedom and flexibility that goes back to your life buyback number. We're also going to talk about how to structure your policy to reduce taxes and enhance your estate transfer. So we all know we pay taxes while we're living, right? Did y'all know y'all pay taxes when you die too? Yeah. That's crazy. That's like, what more do you want from me? I'm not even here anymore. What more do you want from me? All right, so yes, if you're, most of us plan to be very wealthy, right? Yeah. And if you're very wealthy, they're gonna be like, I need some of that off of the top before you even pass this on to your loved ones. Well, I wanna make sure that the most amount of money actually makes it to your loved ones, because of course, they structured the IRS code in a way that if you know the rules to the game, you can play the game, right? So there's actually a way to structure things to make sure the most amount of money actually makes it to that next level, right? So you won't just understand life insurance, you'll be able to use it like the wealthy do. Doesn't matter if you've only seen life insurance as a safety net. So can I be transparent with y'all? I've been in this industry for a decade now. I lose track of time, right? When I came into this industry, I used to view life insurance as, I don't need that. I don't even have kids. Like, I mean, they're gonna get what they get, right? And like, I just don't need that. I can get the cheapest policy and it'll pay out and that'll be fine, right? I didn't actually see it as that way to actually build past things while I'm alive. And I was a professional in this industry. And then I looked at the numbers. Then I started seeing the way that things could be used, and I was like, this is kind of hard to ignore. I literally have one of my classmates in the room, Rashawn. We went to grad school together at the University of Georgia. We both got our masters in financial planning. He quote unquote grew up in the life insurance world, and he was like, Da-Zha, trust me. I'm like, I don't know. I was kind of bought into the Dave Ramsey, buy term, invest the difference. You don't really need a lot. I really was bought into that. And he was like steadfast in showing me the numbers. And again, it was really hard to ignore. And now I coach my clients and I advise them on what I now know to be true and what I've seen with my own eyes, how I've designed my own policy personally, right? Doesn't matter if you've only ever had a group or term policy. So a group policy is a policy you can get at work. Most of us that's how we start off with life insurance. We get whatever they give us at work, and that's kind of the extent of what we have. And if you've never even thought about your estate plan, right? Estate planning is very, very important to me. It's how I really got into this industry. I lost a family member that was really, really important to me. And I said, I watched my family like pick up the pieces. Like we had to scramble around, get this person, this thing, and just things were so disorganized from an estate planning standpoint. And I was just like, but grieving is hard enough, right? Mm-hmm. Like grieving is hard enough. Why not make it easier on your loved ones to solve for that financial aspect of things? Because you can do that while you're alive. You can make it really easy for them to pick up the pieces so that they can have enough emotional capacity to deal with you no longer physically being here, right? How many of us can, off the top, name every single account you have? I see like 5 hands. Imagine somebody else trying to come in and pick up the pieces. If it's hard for you to be like, I got a Chase account, I got Bank of America, I think this is my password. Like, imagine someone else trying to come in and pick up the pieces. So we want to make it as easy as possible to do that, and I'm going to talk to you about the things that we need to do in order to get that together, right? So this is the framework, right? When we think about your safety net, we're going to protect, build, and leverage, right? Protect first, right? This is the foundation. I know we want to do all the fancy things that comes with life insurance, but we have to lay the foundation for your estate income first. And I want to be clear. I'm going to teach you all the things that you need to do in the future, but we have to start where we are. If you try to skip steps and we don't even have the foundation in order, it's going to get real tricky when we try to build on the correct foundation, right? So there are 2 different types of life insurance. I don't care what anyone tells you. It can get fancy. There's IULs, VULs, all these acronyms. There's 2 main types of coverage. There's term and there's permanent. And with that, so as a term policy breaks down, as the name implies, it's temporary insurance. So it is designed to last for a set period of time. And that can be 10 years, it can be 20 years, or 30 years, right? Now with that, because it's only designed for a set period of time, typically it's going to be lower in cost. We're going to look at actually what some of the costs can be, but it's designed to be there for temporary needs. It's not a bad thing. I think that most people should probably have a combination of these 2, right? So just because it doesn't last for your whole life doesn't mean it's bad. And I'll talk to you about how I personally have my policy set up so you can know, just get some insight on what that really looks like, right? I know a lot of times we hear terms like, oh, but you mean I'm going to put all that money in and then not have it whenever I live past that term? Well, it's important that you understand how to structure it, how to adjust things over time so that it doesn't become wasteful, right? And with that, because it's low cost, typically, you're not gonna have a lot of flexibility with it. You're not really gonna be able to customize it in the way that you can when we start talking about permanent insurance and a lot of the things we're able to do. On the permanent side of things, as the name implies, this is permanent. It's designed to be there for your whole life. As long as you're paying your policy premiums, you're doing what you agreed to do, you're gonna have coverage, right? Typically the cost of this is gonna be a lot higher, and we'll look at some of the costs of that. But there is an added component called cash value. Cash value is where a lot of the magic happens. So again, you actually need probably a combination of the two, depending on where you are in your own journey. And with this, the whole purpose is going to be for your long-term estate needs, liquidity, strategy, things that are going to help you build that path toward financial freedom. And there's a lot more flexibility with this that comes in the form of loans, riders, just different options that you can actually structure with that, right? So if we look at the cost of temporary insurance, so this is for a 20-year policy, meaning if you were to get it in 2025, you have coverage, if my math is right, until 2045, right? So after that point, as long as you were paying what these premiums say, so for a 30-year-old, for less than $20 a month, you could have $500,000 in coverage. I spent probably $10 today on my Starbucks order. And I'm not saying don't get Starbucks, I'm just saying you could also secure your legacy for $500,000, right? A month. As you get older, you can see the cost rise because when it comes to life insurance, it is going to be the cheapest when you are the youngest and the healthiest, right? So most times women are going to be cheaper than men. I don't know why they shade y'all like that, but that's just how it works. But that's how it works. So as you get older, the costs become higher. As you can see, as a 70-year-old, it doesn't necessarily make as much sense. Starts to make less sense as you get older, right? If we compare that to a whole life, this is a permanent policy. As you can see, that same 30-year-old that was paying about $20 a month is now paying closer to $400 a month for $500,000 in coverage, right? But that's because this, again, has a lot more flexibility and it lasts for your whole life, right?